This is your market snapshot for July 28th, 2024. We're going to start out looking at the ES futures. We had a pretty wild week last week in the S&P. For starters, from Tuesday to Wednesday, the close to close, we had over a 2% move. And we have not had a 2% move in like 500 something days. I think the last time this happened was actually February of 2023. So that's been a year and a half away since we've had a move like that. And that was basically just, from right here to right here. So that's about 2.5% right there. I'm not choosing the exact high and low here, but you get the point. It's a pretty big move happened that day. A number of people, I know for a fact, were set back probably years just on that move alone. Just people that are selling short duration trades and whatnot. So you really need to be careful out there. Another thing, last week we drew this Fibonacci channel right here. If I go out to a 4-hour chart, you'll be able to see it better. But basically what we did is we plotted the low and the high, and we mapped out our Fibonacci retracements here. Last Friday, we were sitting on roughly this 23% level listed right here. I said our next point was going to be 38.2. We actually came by, and if we go back to the 1-hour chart, we actually bounced off it twice on Thursday. Thursday morning, that was actually the low Thursday morning. We had a rally up, came back down, and looks like we touched it at the end of the day, Thursday afternoon. So that range was actually in play twice that day. Next, I'm going to say that I want to say we're officially in what I would call a bear trend right now. So you really need to be thinking about any long positions you're in, if you want to be in them, and the confidence level you have in them. So if we want to plot this simply, we're looking at this right here. And what you'll see is we have a lower low, a lower high, and a lower low. So if we want to get back into a bullish trend, we basically want to take out this low and then this high right here. If we do not take out this higher high right here, we could be in another lower low, or a lower high, I'm sorry, and the trend would continue down. So what we want to see is we actually just want to see the price come up and go through both this level and this level right here. Probably going to have a lot of resistance in this area, and that is the 5542 level. So I would expect to see some resistance in this area. But if we do go above this level, you're looking at pretty much this level right here, and that is roughly around the 5628 area. We just call that 5620. We want to look to get above that level to get back into, I guess, a bullish trend, to possibly reach another high. So now we're looking at a 5-day, 15-minute comparison chart of the SPY, the QQQ, and the IWM. And it's basically just kind of more of the same from the last week or two. It looks like we're still having some rotation out of the large cap stuff, which is the SPY, into the IWM, which is the small caps. The QQQ down here is predominantly also large cap stuff, just tech mainly. But we can see the IWM is up over 3.5%, whereas the SPY is down 1% and the Qs are down 3% in the last week. Next week is also a very big earnings week. It's probably the biggest one of the quarter. You have Apple and Amazon both reporting on Thursday, Meta, Facebook on Wednesday. You have Microsoft on Tuesday. Monday, you got McDonald's. I'm sure there's some other big names in here, but a lot of earnings going on this week. So that could actually potentially change this trend that we're seeing in the market. Another big deal going on this week is we have the FOMC statement going on here. So need to watch out for that. That's probably going to be a big move there. And speaking of the FOMC statement, right now it looks like we're pretty much set that they're going to keep rates how they are. It looks like it's roughly 93% chance that the rates are going to stay the same, but they are pricing in a rate cut. If we go out to September, it looks like a 88% chance of a cut for the September meeting. But right now for the 31st of July, which is later on in the week, looks like it's probably going to just stay the same. Lastly, we'll have some cash secured put trade ideas here. We're looking at the August 2nd expiration and 3% out of the money. So this is going to be next Friday's expiration. I did go up a little bit higher on the percent here just because the IV has increased a little bit. So we can get a little bit more premium. We go a little bit farther out of the money. But you have the strike price listed right here, days to expiration. This is going to tell you your delta right here, the implied volatility of the stock, RSI, and the IV percentile. Obviously the stock listed right here. And this is another chart I have, what I call the weeklies. This is basically the S&P 500 stocks that offer a weekly options expiration. And we're at 3% out of the money, Friday expiration as well, just to give you guys a couple of ideas of maybe what there is to trade. Something to note, you can see 2 and 3 days on the earnings listed here. So this is all the stocks that have earnings this week, and we can see there's quite a few of them. But I will scroll down. This list is in alphabetical order. Once again, we have Delta listed right here. We have the strike price listed right here. We have your return, annualized return. We have the actual return of the trade. So that would be for roughly your 1 week return. We have the bid and the ask of the actual option contract. The option contract listed again right here. The expiration date. We have yield, and that's basically if it pays a dividend or not. So that'll tell you that right here. Percent change, and that's just going to be Friday. Last price, the 52-week high and low right here. Back to this earnings right here. This is actually trading days, not calendar days. And we also have the RSI and the IV percent. So I think that wraps it up for this week. Thanks for watching. Have a great day and bye.